I would like to say hello to everybody joining us today. We're discussing obviously one of the big gaming deals that's in the midst of taking place. I'm Michael Campbell. I head up M&A at Partis. Partis is a specialist M&A consultancy firm. We look at buy-side, sell-side projects. We work with many companies across the industry, and we've worked with large listed gaming companies down to smaller listed gaming companies. We work with private gaming companies, both large and small. We also do post-merger integration. So that's in a nutshell what Partis does. However, today I'm joined by Michael Brady, who's the founder of Bead Gaming, which is now part of the Guzelman Group, and also Karolina Pelc, who is the founder and owner of Basic Strategy, an advisor and consultancy business in the gaming space. And today we're going to be discussing as I've just alluded to, we're going to be discussing the acquisition of NetEnt by Evolution Gaming. So as we know, as we all know, consolidation's been fairly key in the industry over the last number of years. There's been quite a lot of activity on both the operator side of the business, so B2C, as well as on the B2B side. Today, as I've said, we're going to be discussing the 1.9 billion euro deal between acquisition of NetEnt. And I guess, guys, perhaps an obvious place to start is why now, really? What do we think has precipitated this deal, this bid for NetEnt Group? Perhaps we can start with Karolina.
Hi, everyone. I'm mostly sitting usually in jobs at operators, so my main experience is from a B2C business. But since I've launched my consultancy, I've been involved in advising on product on a couple of deals involving large transactions and live dealer. Why now? I think there are two big points to this. Obviously, not long ago, we've seen acquisition of Red Tiger. And it is sort of an ongoing rumor that Evolution was in the running for both Red Tiger, and there were talks with NetEnt in the past. So I think that acquisition probably sped up the decision on Evolution's side to just get both of them, since they've considered that both of the products. But I think on sort of more strategic reasons, markets would play a key role. Obviously, Evolution is entering US and prepping themselves for market dominance in that market as well. I apologize, there's a massive thunderstorm going on my side. But yeah, so I think positioning themselves as a really key player for the US and completing their portfolio with market leading slot games is a great move. Not to mention the cost efficiency that Red Tiger is very well known for. If you look at the sort of cost efficiency and margins in the US, it probably would be a little bit smaller than you'd see in Europe, because there is not so much scale when it comes to blackjack specifically. So adding that cost efficiency and higher margins of slots in general and Red Tiger would be a great sort of complement to what they do. And the second one is Asia. Red Tiger is a big player with great distribution network in Asia, and having that API access to some of the key operators there could greatly enable market entry and growth in that space.
Thank you, Karolina. And Michael, would you echo a similar sentiment?
I think Karolina sums it up pretty well. I mean, there's some obvious reasons why it's happened now. The Evolution share price is absolutely astonishing. They've been booming over the last year to year and a half. And I think that obviously makes a paper deal quite attractive from an Evolution perspective. But if we look at the kind of market conditions, it's obvious that most consolidation within the markets at the moment is being driven by regulation and market access. So scale matters. And I think it really helps if you are of a scale that you can absorb the incredible costs of getting into new markets. So Evolution incredibly well placed already within the US. Taking NetEnt on board just gives them even more dominance. I think that it's an interesting diversification away from live into slots. I think if we look back at historical data, the live table game market, I think, generally accounts for 15 to 20% of overall revenues. And I think when you consider slots accounts for about 60-odd%, I think it's obvious that with Evolution's power and strength, they were going to look to diversify into different product verticals.
I see. Thank you. So yes, so really it's a combination of a few things, I would say. You as we can summarize: regulation, product, distribution, lowering risk, all those things culminating really into doing a deal, which makes sense. Thank you, guys. And I guess if we move on and we think about perhaps the wider sort of the wider industry, and perhaps what implications that could have, deal for the wider industry, so to speak. What are your thoughts? What would your thoughts be on that? Michael, can we start with you first?
There's obviously people on this call who know a lot better than we do, and people who are inside kind of both organizations. So I'm always loath to kind of trot out cliches and general comments on other people's businesses, but I'll do it anyway. So if you consider that NetEnt over the last 5 years or so appeared to be losing market share, and they then bought Red Tiger, an innovative, kind of exciting business, to try to shore up their slots business. So they were losing market share, and at the same time, Evolution were just consolidating total control of the live table game market. I think that where Red Tiger gave NetEnt its mojo back in slots, I think the interesting thing now for the rest of the industry will be, will Evo and NetEnt as a combined entity be able to succeed in two very distinct areas? And if you look across gaming, I'm not saying they can't, because there's some incredibly talented people within those organizations, but it is quite hard when you stray from your core competency to do things well. And there aren't many examples in gaming of businesses that have cracked that. So that will be interesting. Will there be opportunities in live for others? I doubt it. It feels to me like Evo are now going to control the market. I mean, they already kind of did. They've already made a few acquisitions in some specific areas which have helped them to further control the market. This pushes, NetEnt Live into the long grass, I would have thought, if it hasn't been already. So it's going to be, it'll be interesting to see whether or not they can achieve similar domination in slots. I think that's hard. It's naturally much more disaggregated.
Mm-hmm. Understood, yes. And Karolina, anything to add to that, perhaps?
Yeah, from my perspective, it's hugely exciting to see how this is going to develop, because we already see Evolution innovating a great deal with the likes of Crazy Time, and the titles that they've brought out recently. I think with the whole portfolio of IP that NetEnt and Red Tiger hold together, branded slots, great sort of titles and functionalities like daily drop jackpots. I think hybriding these with live casino and sort of the genius of Todd, I think it could be really, really exciting for the industry. And the other way around, I mean, Evolution holds unparalleled expertise in terms of video streaming technology, multiplayer games. So adding this together, sort of trying to create next generation products, it could be hugely exciting and game-changing. And for the industry as a whole, the one thing I've observed, and it's just a speculation, that this bid has really elevated the place of the industry where it comes to investment, because I see it myself as a consultant with numerous requests for sort of educating asset management firms or investment groups about the industry. I think we've entered big leagues now, and it's no longer like a niche type of industry to invest in, but it's going more mainstream. I find it really interesting to see.
Yeah, thank you, Karolina. And actually, I want to reflect that upon that too. Certainly at Partis, we're seeing the same thing. It was a very specialist industry, and obviously, as the industry has become more and more globalized over time, more and more participants and investors have been interested in the space. But certainly more recently, we at Partis are seeing quite a lot of queries come in, and a lot of those are from more mainstream type investors, normal run-of-the-mill PE, VC type funds who are looking to get into the industry and to get exposure. So that's very interesting and a point well made, actually. So if we take it then to the next sort of level, that's sort of the industry, so to speak. But what about the competition side of things? For some of the guys that are left, for the likes of the micro gamings and the Playtechs and the others that are around that also provide content and slots, etc. In competition to NetEnt in particular. So this new combined group it's going to have a lot of power, as we know. So where does it leave the competition, do you guys think? We'll start with Karolina perhaps first on that.
Well, I think for live casino specifically, it doesn't change all that much because Evolution was already a dominant player and innovating to the extent that it's really difficult to follow. For slots, it could change, especially if certain expertise and creativity from live is being transferred to slots. And already the sort of merger of NetEnt and Red Tiger is interesting of where that takes them in terms of competitive market and their space. But I think this, what they could become a competition to is not just live casino and slots companies anymore, because with that power behind that new formed company, they can enter into anything from an aggregator business to a full rounded platform player management and wallet business, and rival other competitors like GAN or SG, especially in the US market where it's still immature and big players are only being sort of establishing their ground. So I would watch out for sort of diversification of business that they'd go into. And at the same time, in the live space, I think they're becoming the Amazon of gaming. I really think they're increasing their sort of long-term resilience and defensibility, especially with the IP that they're acquiring and stuff that they can do with it.
Great, thank you. Michael, anything from you?
I mean, I'd be incredibly bullish about their prospects as a combined group, albeit it's hard to integrate businesses. And I know that there's enormous reasons why that there's great cultural alignment between these businesses, and one would hope it would be a successful integration. But if I were a competitor, then I might sniff opportunity. When you're particularly combining technologies and you're trying to achieve those economies of scale and maybe operational efficiencies across the combined group, that will inevitably take eye off the ball in terms of core competency. So competitors may see this as an opportunity. It's not obvious to me that, looking at the businesses and looking at the technical prowess of them both, they are very, very good. And I think Red Tiger's introduced even more quality to the overall group. So maybe they'll breeze through it, but, history would suggest that integrating businesses is quite a challenging undertaking.
Yes, indeed. Thank you, Michael. Yes, and I guess just sort of to add to that is, I guess perhaps from a product sort of vertical point of view, sports, I mean, that could be another area. But as you say, Michael, it may dilute their, their core competencies and their focus. But do you think that's an area perhaps that they could explore in terms of sportsbook technology?
I don't know. I mean, I think they could do anything. I mean, they've got the resources, the power, and the cash to do whatever they like. But whether they want to go from being a game vendor into a fully fledged platform with every single product set, I don't know. I mean, I would imagine that when you look at what's going on in the US, there's been some astonishing deals done with technology providers who I suspect don't particularly have what they've said they have. So I think that's ripe for disruption and a second wave. When you look at certain markets which are regulating around different product verticals, where maybe live is a monopoly product, if you look at what's going to happen in Germany, I think that there's clear opportunities there for somebody like Evo to offer a full product suite, where live is going to be the lead product. So I don't know where they'll go. I would have thought that it's going to be challenging enough to focus on the two things they now do, as opposed to the one thing they did do. So maybe adding more will be not necessarily the most prudent move.
I see. Thank you. That's very good. Thank you very much. And I guess maybe a couple more things for us to discuss. Where do you guys? We can maybe start with Karolina on this one. Where do you think? I'm not asking for any predictions per se, but perhaps just a catalyst for other deals. On the supplier side, maybe in particular. I mean, we've seen a flurry of deals, of course, on the B2C, the operator side. Do you think this is the sort of deals bound to kickstart other deals on the supplier side, more consolidation on that side as well?
Absolutely. I think that we're just getting started and it's going to be an interesting year. And to follow up on what Michael said, I also wouldn't rule out a sportsbook acquisition because specifically with the characteristics of sportsbook rather being the biggest acquisition tools into live, but not really in control of the live casino provider, because it's very much dependent on an operator sort of capability to build cross-sell features. If there was sort of one provider of the technology and could build the features into the product, it would be hugely beneficial for the natural flow of players from live and specifically in play into live. But in terms of other acquisitions, I could definitely see some other big companies still trying to get into live dealer space, and maybe not to compete with Evolution, because that's quite difficult right now, but just to complement their portfolio and trying to steal small market shares and innovate as well. And I can definitely see more acquisition when it comes to slot providers. There's a decent amount of really well-performing companies out there. Each one of them have their unique characteristics and pretty strong selling points. So I think there's a few big players that are still searching the field for the next sort of addition to build competitive advantage.
Very good, Michael. And would you add to that?
As ever, there's lots of rumours out there. There's lots of kind of whisperings and chatterings about different deals that are in the offing, and I have no doubt there will be more. There's going to be more consolidation. I think the whole move towards a more regulated world of gaming, I think, means that everybody needs that economy of scale, and there are definitely benefits to trying to have your content licensed in markets and have numerous different product sets in the same place. I think there are some advantages to that. I think that nobody said it, and I'll say it, the kind of post-pandemic world, I shouldn't really talk about that anymore, I guess, but the post-pandemic world, if you think about any retail business that's suffered big time over the last 3-4 months, many of them are still sitting on a ton of cash, but have now uniquely seen the vulnerability of having a physical business. Now, they must be looking around thinking we need to diversify more into digital. We need to ensure that our digital revenues are there to back us up in the event that something like this happens again. So that's going to presumably create pressure and a pent-up demand. And in turn, as Karolina said, there's real quality out there. There's so many game studios building really good content, and they only have relatively small amounts of market share, but their potential's enormous if they were in the hands of much more cash-rich organizations. So I wouldn't be surprised if we see a lot more action.
Thank you, Michael. Yeah, that's very good. We've probably got a couple of minutes, a minute or two, just to maybe take a few questions. I see there's a few questions that's come through from the audience. I'd be happy to handle this one. There's particular reference to the multiple on the deal. If you look at the multiple on the 2019 EBITDA, that's NetEnt's EBITDA, the acquisition price implies a multiple of about 22 times, which seems quite a high multiple, if I'm honest. If you compare that to some of the other deals in the industry, many deals typically are on the operator side between 8 and 12 times. We've seen deals higher. For example, the Stars, Flutter merger. I mean, that implied a price sort of in the low to mid-teens times EBITDA. But certainly at 22 times, it seems to be it appears to be a demanding multiple. But I guess, and people are a bit surprised at that, but I guess if you look at Evolution's own multiple, it itself is trading at quite a high multiple. So this of course helps when you're acquiring other businesses to acquire at you're acquiring at lower multiples to bring that in. Then obviously there's the opportunities around synergies. I think they've referenced 30 million euros in synergies, which looks to be somewhere in the order of about 10% of the combined cost base. So that's good. That drops through to the bottom line, and undoubtedly there'll be revenue synergies as well. Difficult to quantify usually in these deals, but I think a key thing in usually assessing these things is also how the market reacts to some of these deals. And we've seen when the deal was announced, typically what you'll see is the acquirer's share price tends to sort of slide, or it slides by a couple of percentage points usually in a lot of M&A deals. But in fact, if we look at Evo's share price now, it's up 18% since the deal was announced. So that's always a very good barometer, I think, in terms of the market, what the market thinks about the deal. So just on multiple, I wouldn't perhaps get too hung up on it seems demanding, but I wouldn't get too hung up on that. I think it's whether or not it will set a benchmark, not quite sure. I think most deals tend to drive their own negotiations around multiples. So if there's something of strategic value, of course, then that tends to drive a premium in particular. So yes, that's that, and I think that's it for today, folks. Hopefully, it's given us some good insights, and our audience as well. Thank you, Karolina. Thank you, Michael. Much appreciated. Thank you for joining.